Bonoan. He is the Vice Chairman of KPMG RG Manabat and Company, also head of tax for that organization. In a former self, he was the Undersecretary of Finance, and he is responsible for innovative and far-reaching programs such as shepherding the VAT reform law, which is one area, we have that to thank him for. Also the RATE program, the Run After Tax Evaders program. So we should thank Noel for, both are being very well administrated these days, as you know, but we should thank Noel for running after us to collect our taxes and VAT. Okay, but since then, yes, nobody is, I'm being funny, but they are good projects. Since then, he's joined the KPMG organization, and with other partners, but his organization has grown from 300 people to over 900 people today. So it's certainly one of the solid and largest organizations of the, and this is a competitive industry, so it's not easy to grow like that. So please welcome Noel Bonoan to the stage of RG Manabat.
Thank you, Richard. Good afternoon. Maybe I should start off by explaining myself. Nowadays when we make pitches to clients, one of the pitches I'll say is that, the BIR used to report to me, implying that I have very good relations with the BIR. In fact, I was responsible for the VAT reform law. And after that, my partners, once we'd walk out of the room, would tell me, hey, Noel, maybe you better not tell them that. We might not get them as a client. But anyway, Richard did mention that the firm has grown from 7 years ago, from 300 people to 900 people, offering audit, tax, and advisory services. Now, I wish I could say that it was primarily because of my excellent management skills, but the truth is that's not true. No? I think what happened in those 7 years was that a more exuberant and younger entrepreneurial class came of age. You had a government that is serious about governance and fiscal discipline, and you have the West renewed in Asia and the rise of China, and all of this created the perfect storm for a perfect environment for growing our business. So you can say that the stars aligned to create a promising economy, and if I were to look into my crystal ball, I will continue to hold that they will continue to be aligned in the foreseeable future. Now, again, like Jesse, some caveats, some disclaimers. I'm not an economist. That privilege belongs to more qualified speakers before me. And my role here is to maybe describe the ongoing deal activity that we as an advisory firm, as an audit firm, see in the market, either because we participate in them, we participate either by helping consortiums get together. We do match a lot of our clients among themselves, or we do a lot of transaction services for them in terms of valuation of assets, due diligence, all the way to post-merger work. No? Or if we're not involved in it, I would say that my knowledge of the deal flows comes from us closely monitoring the deals that are happening in the market. No? So what I intend to do is this. No? I will divide my presentation into essentially four parts. And I will take some economic data that is essentially already readily available. And I will, against this, I will juxtapose some of the market activity that we are involved in, or that is happening in the market, even though we're not involved in it. No? So I will essentially divide this into consumption as the main component of GDP, where I'll talk about consumer buying behavior that has resulted in greater activity in terms of mergers, buying of brand names among companies involved in retail and real estate. I will then go on to talk about investment and capital formation, which, although lower than consumption, is still growing. And I'll also touch on the infrastructure, what's happening in the infrastructure space in the Philippines. I'll then go on to some capital market activity and bond market activity that we're seeing or involved in. And lastly, I'd want to leave you my thoughts on some of the things that we see in the Philippines, what is out there on the horizon that you should also be looking at and keeping your focus on. No? So again, we're all familiar with the GDP number. In 2013, the Philippines was one of the fastest growing economies in Asia at 7.2% growth. I should point out that the Philippines has actually been having positive GDP growth rates for the past 60 quarters. That's all the way until 1999, granted at different rates. No? But we have not yet experienced within those 60 quarters negative growth that some of our Asian neighbors have experienced. No? So I would think that on the whole, if you look at a sustained period, you're seeing the Philippines continuously increasing its GDP. No? And where is the growth coming from? Well, 70% of the 2013 GDP came from household final consumption. This then is closely followed by capital formation or investment at 20% of GDP. These are, if you look at the slide, represented by the red and the blue segments respectively. You know. Now, although the majority of the Philippine population is in the low-income demographic, and we're talking annual per capita income of around $1,590 or in the national capital region, you can translate that to $8 a day. You know. If you put that entire group together, the combined annual earnings of that group would be $71 billion. And so this is a significant contributor to basic goods consumption. And according to Business Monitor International, because of consumption, Philippine retail sales will grow from $32 billion in 2012 to $36 billion by 2016, or a growth of 12.5%. Now, the largest uptake in the consumer space is clearly the food and non-alcoholic beverages component, which is the red component, which takes up 42% of household consumption. This is followed by utilities, and this is followed later on by transport and communication. The rest is lumped in with others. In fact, what's important here is that Filipinos spend more on household appliances than they would spend on health services, which is only 2% of GDP. So, given the makeup of household consumption, it's no surprise that many of the M&A deals or the acquisition deals that we're seeing, or are involved in, are in this significant consumer space. The notable of these acquisitions are those that allow retail businesses to expand their market and geographical reach. Some examples. Robinsons. Robinsons has recently raised 26.8 billion pesos on the stock market, and they plan to have 1,391 stores from 982 stores today, and their target to reach that 139 stores is by 2014. Ayala and Store Specialists, which is of the Tontoco family, they have recently announced a joint venture, and they plan to open 20 department stores in the next 5 years. And this is targeting the more upscale part of the market. Ayala and Pure Gold. Pure Gold is one of our clients. We do a lot of work for them. They've announced a joint venture that will be to develop and operate a new brand of supermarket chain that will be part of Ayala Land's mixed-use development targeted to the middle and upper classes. So this is another trend we're seeing. We're seeing a lot of alliances in the retail space, and this is of companies that have strong brand loyalties. And what we're seeing is that they're creating alliances to be able to block out the competition from their traditional strongholds. Everyone heard of the Max's acquisition recently of Pancake House for a total of 3.5 billion pesos. When that sale is consummated, Max's group will have a total of 555 branches of restaurants catering to the middle to the upscale market. In fact, the buzz on the street is that Martin Lorenzo, and this is just a rumor, Martin Lorenzo, while taking his share of the profits from the sale of Pancake House, will be setting up an investment fund primarily to go back into the food business. I don't know if it's true, but that's the buzz on the street. This deal only eclipsed a deal that we were kind of involved in 4 years ago in 2010, when Jollibee paid 3 billion pesos for 70% of Mang Inasal. And that was a pretty interesting deal because at the time that he sold 3 billion, at the time that he sold his 70% share for 3 billion to Jollibee, the owner of that, Injap Sia, was only 34 years old. And I think he's getting to be characteristic of the age bracket of the new millionaires and the new people who are getting to be billionaires. Injap, if I could digress, Injap was a client when he sold his stores. It was 220 stores. No? And the time I got to know him and brought him into our firm as a client, I think he was at his 100th store. Now, Injap would always call me Tito. And this is something I actually, for those in the audience, Tito means uncle. And you're either an uncle by blood or an uncle because you're just older. And so, I told him, so I was a bit uncomfortable whenever Injap would call me Tito because we weren't related. No? So finally, when he made his 3 billion, I told him, Injap, you should stop calling me Tito. Call me Daddy. So what we're now doing is that we are seeing more consolidation and strategic alliances on the horizon. No? Example, no? Mall operators are tenanting their malls with their own affiliated brands. Recently, the joint venture between Injap and Tony Tan Kakyong of Jollibee announced that they will be publicly floating their joint venture called Double Dragon. And by the way, it's called Double Dragon because, as Injap explains it to me, both him and Mr. Tan Kakyong were born on the year of the dragon. They announced that they will be floating their shares and they will be constructing a whole network of strip malls, primarily in the Visayas area. Now, the way Injap was explained was that imagine all these strip malls, that the only food products you can see there are Jollibee stores. So you have Mang Inasal, you have Jollibee, of course, the flagship store, you have Chowking, and the demographic that goes to these stores is primarily middle class. Now imagine you sold 34% of that company to SM, which can now put in their supermarkets in those strip malls. What SM did was essentially buy into an operation which would allow them to not build huge malls, one huge mall in, say, one city, but be located in so many neighborhoods within one particular city. So you would be having these malls that have essentially Jollibee, the Jollibee name, and the SM brand. And it's a whole lifestyle mall that they plan to have around these malls. They plan to have theaters, they plan to have entertainment sections, and of course the shops that go with these malls. No? So we also see that convenience stores have on the rise. And again, this supports the theory of the retail, that retail business is one of the strongest growing in the Philippines. So much so that the Philippines is already getting a reputation as having the most number of convenience stores outside of the United States. So you're looking at Family Mart, which just recently entered. It's a joint venture between the Ayala Corporation and Itochu of Japan and the Rustan's Group. They, as of 2013, when they opened, they have 40 stores. No? Ministop, which is a joint venture between Robinson's convenience stores, which is a joint venture between Robinsons, Mini-Stop Company Limited with Japan, and Mitsubishi Corporation. As of February 2014, Mini-Stop has 400 stores nationwide, and this year they plan to open 100 more convenience stores. As of today, of course, the largest convenience store chain is 7-Eleven, which has 1,002 stores in operation nationwide. Now, again, what supports the retail, what we're looking at in retail is not just in the distribution, but in brands. Recently, we, as a part of a global regional restructuring effort, Unilever sold the Royal Pasta brand to RFM, and the sale was for $48 million US. And it just makes sense. Pasta, a very humble food product, but you go to every Filipino party, pasta will be served. Spaghetti will be served. You know, the spaghetti with hardly any meat sauce, with a lot of tomato sauce, but hardly any meat, and a lot of hot dogs, di ba? Or the ubiquitous hot dog. In fact, pasta is so important. You know, in KPMG last year for Typhoon Haiyan, we cut back a lot of our expenses just to be able to raise funds to donate. No? And one of those things that we cut down on, which was suggested by the staff, was that their Christmas baskets be minimized. So before, every year we give staff Christmas baskets, it will have chocolate, it will have wine in it, no? A whole Christmas goodies, no? Box of Christmas goodies. And this year they said, cut down on the Christmas baskets, but don't cut down on number 1, the spaghetti, number 2, the spaghetti sauce, and number 3, the ham. So, very good, so it's a good acquisition. I would say that's a good acquisition by RFM. Food obviously is recession-proof, and the Filipino market is composed, as we will see, with $71 billion US buying power to cut into that food, into the food share of the Philippine market, consumer market. So, as I see it, the broad themes that run through these acquisitions that I've been telling you about is that the broad theme is that these brands have a very strong following among Filipinos, and who are wildly loyal to these brands. And I think this trend will continue, whether purchase or strategic alliance between the branded retail outfits to food brands, to acquisition of food brands. This will extend over to clothing and other household expenses. Let me move on to capital formation. So we've seen that consumption is one of the strongest suits of the Philippine economy, and I wish we can say the same about investment. No? Investment in 2013 took up only about 20% of GDP. Compare this to our neighbors, whose percentage of investment to GDP approximates average around 30%. No? Now, despite an increase of 10% of infrastructure outlay as a percent of GDP, public infrastructure remains relatively low. In fact, the PPP just last February 14, issued a status report on their, the PPP Center just issued a status report on their PPPs, and out of 49 projects that have been appraised and costed at 376 billion pesos, only 20 have been actually rolled out. And this would be in the range of 50 billion pesos. So clearly there is still a big lag. And it depends, this big lag, I guess it takes a healthy sense of optimism about how you look. It takes a healthy sense of how to look at it. You can either look at it as optimistic, meaning this is your whole market ahead of you, or you can be more pessimistic and say, you know, well, it's not going anywhere. Why should I be involved in that space? No? But you might want to remember the story of the pessimist and the optimist who were arguing, and they were arguing about whether the glass was half full or half empty. You know? And finally, when they're done arguing, they go back to the glass, and the glass is totally empty. There's no more water in it. No? And there was a note that said, "They're optimist and pessimist. While you're arguing about the glass and the water, I drank the water. Signed, the opportunist. So that is that is something that you should take into consideration while uptake of infrastructure is still low. There is a lot of upside still, we think, to be made in that particular sector. Now, what are some of the reasons of the slowdown? Well, one is financial viability and the ability of government to take on its right-of-way obligations. No? And of course, this goes back to what Jesse was saying about limited government budget. No? Sometimes, just recently, I've seen turf wars between government. We're actually advising a company right now that has a long-term lease over government property, and it now wants to raise debt funding, no? Debt financing to develop the property. Now, but the potential financier wants the annotation of that lease on the government title. The problem is two government agencies are fighting over who has the authority to allow the annotation to be made. No, allow, not record the annotation, but allow the annotation to be made. And this is becoming a political issue, and this is something that we're advising on right now. No resolution, but we're hoping to get resolution soon. No? To be fair to government, it's not always government's fault. There is one project that we're advising right now. You may have heard of the snide remark that in the Philippines, Philippine elections, there are no losers, only those who claim that they have been cheated. It happens even among the private sector. No? We're actually advising one consortium now that has won the bid of a major PPP project. And they had the highest bid. The problem is the second highest bidder is now contesting the credentials of that winning consortium to carry out the project. The thing is, government biddings go through two rounds. The first round is the pre-qualification stage, where they vet all your credentials, and the second is the financial stage. Our point being, it's too late to question the credentials at the financial stage because they had all the opportunity to question at the first part. But you have those things that happen. No? Thankfully, government intends to make amendments this year to the BOT law and its implementing regulations to address some of these issues that arise when projects go out to tender. No? So the poor level of government investment notwithstanding, fortunately the private sector has been filling in the gap. And we see this particularly in power projects that in power projects. No? For example, recently First Gen announced that they will be spending $1 billion as investments. And we look at, I think a lot of the bulk of this will be going to the creation of regasification plants for liquefied natural gas. This is to take away their dependency on natural gas coming out of Malampaya, which is projected to start drying up by 2025. No? We're also involved with some other power development projects, and we see that their investment size ranges from $24 million. For example, a 20 megawatt coal thermal power plant. No? We're also looking at, we're aware of $160 million necessary required investment for a 50 megawatt magnetic flux power plant. And another of the entities we're dealing with has a requirement for financing of $426 million for a 142 megawatt hydropower plant. We're also seeing a lot of activity in the mini hydros, 10 megawatts and below. No? And we've actually helped a number of people who own service contracts to get financing for their projects. No? Things are looking up. Earlier, Hans was in the house. So I'll just quickly go through what he probably had said. He's projecting a 14% increase in equity deals to 200 billion pesos. PDS, which is the bond exchange, not as high profile, but you'll be surprised with the volumes that they are trading. The volume of issuances grew by 24% from 2012 to 2013, and to date has a level of tradable debt instruments at 344.5 billion pesos. I think this is clearly the result of a low interest rate environment and much improved credit rating of the Philippine government. No? So these are some of the listings that we've been seeing recently. A lot of them are still very familiar names. You have Robinson's Retail Holdings, but you also have names like Philippine Business Bank. Philippine Business Bank, I don't know, before my first mortgage was out of Philippine Business Bank, and they're the only bank in the Philippines that has their headquarters outside of Makati. They are in fact based in Caloocan. Their investor, their customer base, very stable manufacturing and entrepreneurial people who live in the Caloocan area. And this is owned by Ambassador Fred Yao, who incidentally has also announced plans to list his Asia-wide Refreshments Incorporated, possibly through a backdoor listing. And Asia-wide Refreshments is essentially the bottler, the licensee and the bottler of RC Cola, and he plans to fold in Zesto as well. So again, you go back to that story of retail, of household brands in the retail space. No? I expect that you'll be seeing some new listings in the stock exchange. Double Dragon, for example, has also announced in the news that they would want to be doing a listing. Possibly backdoor is what is being speculated on. Earlier it was mentioned about why I like dealing with a lot of these businessmen. It's probably mentioned earlier. A lot of these businessmen really run mom and pop organizations, no? And they are now at the cusp of legitimizing, quote unquote, their operations. And one of the things that they've been coming to us for advice on is governance. They are very interested in transparency, in governance, in the way they do business. And number one, they are very interested in how to ensure that they are tax compliant. And that's where I come in, because I tell them off the bat, no? If you're my client, you only maintain one set of books. No ifs, no buts. And there is an openness, especially among the younger generation of businessmen, to do things the right way. So in that sense, even from my observation on the ground, I'm very encouraged about what's happening. No? So other things that we're looking at, where are we seeing other deals? Where the financial services sector will be quite active. Just in the past month alone, we've been in discussion with one universal bank and two commercial banks, no, who are looking for new equity and are turning to new investors to provide that equity. Now, in the case of one of the banks, the driving force is the more stringent capital requirements of Basel III. But in two of the other banks, really it's for expansion and to take advantage of very favorable market now, no? Commercial activity. There are also 84 non-life insurance companies that have to consolidate, that among themselves will have to consolidate. The DOF has said that by December 31, 2022, the capitalization of a non-life insurance company must be 1.3 billion pesos. So we expect a number of, in fact, we are working with a number of insurance companies on their consolidation plans. No? So on the horizon, just quickly, what are we seeing? What do we think will be the big trends in Philippine business that you should be aware about? Number one, in no particular order, I'd like to talk about them. No? These are the improving revenue collections and continuing this fiscal discipline, peace in Mindanao, and the creation of Bangsamoro, the ASEAN Economic Community, and electricity and infrastructure requirements of the country. And I guess these are the things, if you were to ask me what I would be concentrating or what businesses I would be concentrating on, it would somehow have to do with what I told you previously, retail, but also going forward, these are the things that you should be looking at. Okay, tax collection has been improving significantly. No? First, why do I say tax collection? Well, as Jesse pointed out, you need more taxes to build infrastructure to alleviate poverty. And once that virtuous cycle is created, then you have people who will be a natural market, no, for your products. And by 2016, in 2009, the GDP, the percentage to GDP of tax collection was 12.2%. And by 2016, we're expecting that that will reach 16.1%, much better than the 15.9% that took place in 1996 and 1997 under the Ramos presidency. Of course, again, doing business in the Philippines is a little bit more challenging because of the rather aggressive stance the BIR has been taking of late. What's interesting is that since 2010, the BIR, under our good friend Jimenez, has issued 70 revenue regulations, 149 revenue memorandum circulars, and 279 revenue memorandum circulars. So my advice is take a look at your tax compliance, make sure that your taxes are current, get advice from a tax advisor, and you'll be able to meet the BIR confidently head-on. ASEAN Economic Community. This is something that you should already be conscious about, because this will force our industries to be more competitive. As you know, AEC's immediate impact will be felt in the reduction of sugar tariffs to allow for freer movement of goods within ASEAN. Just to give you an example, the sugar tariff industry is projected to go down from 18% to 5% by 2015. No? And for the sugar industry, this forces them now to be more efficient. And that's going to be the same story all over, cutting across all industries. No? Already, we see Philippine businesses gearing up for ASEAN integration. For example, in the financial services space, insurance companies have to start being innovative, because what ASEAN will do is it will create a borderless economy. If, for example, me as someone who as a buyer of insurance would want to buy life insurance, I can check how much is Pru Life selling a particular insurance product here in the Philippines. How much premium will I be paying? Then I can go online and check how much is Pru Life in Malaysia selling the same insurance product. And if it's cheaper there, what's to stop me from buying in Malaysia? So clearly those are very clear drivers for change. And we see this also, one of the drivers for all of these consolidations is the ASEAN Economic Community. Peace in Mindanao. Very exciting. It's not every day that you create a state within a state, but we think that once you get the security and peace situation fixed up, there will be a lot of business opportunities. We're actually in talks right now with the leadership of MILF to look into creating financial products centered around Islamic financing. And we think that it's possible. Some tax issues have to be cleared up. And that's something very exciting that we're also looking at. Last one, no? Power. If our growth is to be sustained, then power will certainly be a significant factor in achieving that growth. No? The Philippine final energy demand is seen to expand at an average annual rate of 2.9% from 2010 all the way to 2035, translating from 276 million megawatt hours to 569 million megawatt hours. No? So we think that there are a lot of opportunities in this space. No? So in closing, just to summarize, no? Consumption doing well. If you're in the retail space, stay there, protect your market share. If you're not in the retail space, look at it more carefully. Second, investments in capital formation, not yet enough, but I think steps are